candle, it would be natural to be a buyer, wouldn't it? Do you agree? Do you all agree that that would be a natural buy trade? But then it causes this problem here, right? So this is going to bring in a lot of natural algorithmic buyers. There's going to be a lot of algorithms using this as a tool to buy into. But obviously this could bring in a lot of sell orders. So there's always got to be this idea that there is always a possible double edge to these book trade liquidities, because that's why we need to know whether it lines up with value. Because this is either a what? This is either what I would call in this trade is either a passive. It's either a passive buy because the book liquidity is going up. It doesn't mean there's any buyers here, right? But the book's going up. So I'd say this is a passive buy. But this could also be an aggressive sell, because that buying that's being brought in by the book, judging by the fact that the candle's spinning, could well be an actual ICE order hidden under the surface. So in other words, what they'll do is they'll visibly show bids. Now that bid could be three candles, three prices away, right? So the bid might be down here, right? There might be no intention of ever filling this bid, but because the line's going up, of course, it's suggesting that the number of bids that are starting to stack into this is here, for example, right? But these might not be real bids. So there might be a lot of bids in there, which means it's a passive buy trade, because obviously if the price dips down into that area and it goes bid, that's absolutely fantastic, right? But if it doesn't go bid, and what we see instead is that it brings in a lot of buy-side deltas, right? So a lot of people come in here and they buy it because of the buy-side delta, right? So we get this buy-side delta, but the price simply doesn't go anywhere. And it stays, and it stays, and it stays. What we're now starting to conclude is that this is probably got a hidden ICE offer jamming into this trade, right? So we've got to be clever about this. It's not dead certain that that is 100%. It's a passive buy, absolutely. And if it brings in a delta, we should be able to make a lot of money, absolutely. But if it brings in a delta and the price does not go, you can almost guarantee that it's an aggressive sell, because they don't do ICE orders for nothing, right? They don't do ICE orders for nothing. So just be aware of the fact that it can be a double-edged sword. You see how when the selling deltas are, the book is very short here? So take a look at this, right? So this is a great example. Take a look here. Do you see how there's a lot of selling book? And then we start seeing this delta seller coming in. And we look at the delta seller and we say, well, how far is the price going? And we start watching this. Well, this price should not go up. If this was a spinner candle, this would be a Charlie D transition. So this could be a very, very big spoof to try and bring sellers into this, because the guy that's actually trading this is bullish. So they're obviously going to look at some demand areas to try and find that selling, right? So we're looking for that spoof. We're looking for that absorption, if you like, to start becoming visible. So the tick delta should diverge from the volume delta if this is a spoof order. Do you agree with that? Just imagine, for example, that this is what was happening here. So the volume delta on this spinner candle was doing what? Well, obviously, they're still trading into the best offer. So because they're trading into the best offer, the volume delta is going up in line with the book. But at the same time as it's trading into the best offer, the price goes up one tick and down ticks almost immediately. So the tick delta down ticks, the volume delta upticks. Whilst the book is still bullish, that is now being defined as a spoof type trade. And if that lines up with natural sell side value, you've got a great trade opportunity to deal. So there is that nuance in and around these trade areas that you've got to be able to recognize very clearly indeed. And if you can spot it, you can obviously make some monies. There's a good example here. See that green candle there? A perfect example of what we're talking about. You see the book delta narrative? Sell side delta, buy side tick, sell side book. Somebody is buying all that delta, and they're really pumping the sell side book here. This is going to go higher, almost guaranteed that that price there is going to go and test into this top edge. At that stage there, there's almost no doubt that that's what's going to happen next. And that's exactly what happens. Remember, this is still definitely there. So the idea that this could be a passive sell at the top edge is real, very real. Most of the time it will be a passive sell, but not always. Not always. Into the top edge is going to be the passive sell, but on this occasion, it was a passive sell. So you cannot take the limit order book in isolation. I think a lot of people after yesterday's classroom, when we talked about it being the best algorithm of all time, a lot of people think it's the only thing they need to look at again, and that same old problem emerges. It's the only thing they trade, and then they walk into the room and they go, oh, I traded that and it was divergent and I lost money. Yeah, well, what else did you trade? Nothing. You cannot take pieces in isolation like that and hope to be successful. Most of the time you will be, but then there's going to be that one time that you double down and you double down and you double down, and all of a sudden you think, what the hell just went wrong with my trading there? I have no idea what went wrong. Because you don't know what went wrong. You're not able to figure that one out. You've got to be better than that. You've got to know. You've got to know, guys. You've got to know what it is you're looking for. Cannot take it in isolation, guys. It's simple as that.